Good morning, welcome to the Phoenix Blue update on Monday the 27th of February. I'm Tom Colley and I'll take you through the news in the markets this morning. Right, as we head into this week, how we follow on for a week where we had a great deal of dollar uncertainty. That will certainly reign again this week. So our recent policy of trading very cautiously on the majors and minors will continue, and we'll focus on those predominantly intraday if opportunities arise. We'll continue to look at technical trades on cross pairs, and we'll bring those to you as and when on the normal basis. Why we've got so much dollar uncertainty? Well, if we look at last week, we had a lot of input from FOMC members prior to the release of the FOMC meeting minutes. In the intervening period between the meeting and the release of the minutes, we'd had some really strong data out from the US. So we believe that we'd got the members, the FOMC members, out trying to effectively talk up the minutes to cover for that intervening data. When the minutes came out, they were more on the dovish side than possibly, had they been done, the meeting being a week later, they would have been. So that we saw a bit of confusion in the market there last week. We also, we've had Janet Yellen say that March rate rise is still potentially on the table, but the futures markets are telling us that they're preferring a rate rise in May. They currently got a figure of 63% probability on a May rise against 36% probability on a March rise. Adding to that, our old friend Donald Trump, he is due on 2 o'clock Wednesday morning UK time to speak to the Joint House of Congress. This is a major political speech. Depending where you read, he could potentially be talking about infrastructure. He could be talking about tax and regulatory cuts. Both of which could significantly affect the market, so another reason for caution. We also have an extremely busy week in terms of more FOMC member speeches. There are 5 this week, with the addition of Janet Yellen speaking on Friday. So again, a lot of potential for the market to be interpreting and reinterpreting what's said and what happens. If we add into that political uncertainty in Europe, the French election had started to play in significantly into the euro. If we look at the yen, we had the Bank of Japan Governor Kuroda last week making statements which were slightly less dovish than normal. And then in the pound, we have suddenly had the appearance on the political scene of a Scottish referendum vote again, which certainly this morning has pushed the pound further from significant lows on Friday. So a lot going on there. So it really is a week to potentially trade extremely cautiously, see how things play out. And I know we've been doing a lot of this already this year, but trading is as much as anything about protecting your capital and only taking trades where high probability exists. If it doesn't exist, it's better not to risk your money than to lose your money. Okay, let's have a look at the news for today. And today itself is very little. We've got the US dollar, or the US consumable goods orders, out at 1:30 p.m. What I've also done here is I've listed all the FOMC speakers listed this week. All the dates are there. Trump's speech is also in there, 2 a.m. on Wednesday. And then Fed Chair Yellen speaking 6 p.m. UK time on Friday. Now what I've also put in here is this is how the individual members of the FOMC committee are viewed in terms of being doves, hawks, or a couple of, let's call them, fence sitters here. If you use that, that can help you interpret what's actually said by these various speakers, because such as we've got FOMC FOMC member Evans speaking on Friday. Now, he's perceived as a dove, so if his comments are hawkish, they're obviously much more significant than if Stanley Fischer, who also speaks Friday, makes hawkish comments, because that's what we expect from him. Similarly, these non-committal ones, or the ones that are perceived in that way, if they make comments one way or the other, they can be more significant because it's simply a change from their expected position. So that's a useful piece of information to keep if you don't already use it. The members of the FOMC committee change every year, so that will remain valid for the whole year. So if you keep it near you, that should be helpful for you. Right, over to the charts themselves. Here's the dollar index. We had a move down which came to this 160 level through here, which was rejected convincingly on Friday. Now I've got drawn in here a trap range. Not perfect in that we've got a clean and significant breakthrough here, but there's a significant level of congestion through that area that we're currently sitting in. When we look at the euro, we'll see an exact replica of that, which is exactly what we expect. The purpose of that is really to say, right, if we get a break outside that, that is a more significant move because of that than simply a break of the level. So clearly we've got two levels here that a break either way, which will give us certainly a picture for the medium term. If we were to break to the downside, I have to say, until we're bearish the dollar, we're going to need to take out this low here, or even before that, this level here at let's call it around the $100 level, to change our bias for the longer term, which is based on the monetary policy divergence between the US and the other major economies. Here we have the yen. Now we had a yen strength through last week, potentially on the back of a risk off scenario, money into these markets in times of uncertainty. I know we've not got a full risk off scenario because we have the stock markets rallying again, so we have a conflict in there. Significant level through here at about 11,111.60 for an intraday level, potentially to take a trade to the long side today, if that's to occur, or any break below this level is obviously going to change the picture there. I mentioned that Kuroda, governor of the Bank of Japan, had made some less dovish statements last week. Here's the euro. Again, here's that trap range that I spoke about. Again, any break or any close below here, we tested this level last week. Price was rejected on a daily basis. We've got a downward trend line here, which could potentially be a falling wedge. We had a false break, where you can see there yesterday we're still below that trend line at the time this was slide was taken this morning. But again, with all that news and everything going on, very much caution reigns in this market. The French election beginning to have a much more significant effect. The real fear factor for the markets, or the uncertainty factor, is the difference between one of the major existing governing parties coming to power as the president, and Marine Le Pen, who is more of a outsider in the mould of Trump or Brexit, in that she has talked about coming out of the euro, or not out of the EU, but out of the euro, but also has more protectionist policies, somewhat like nationalist policies, if that's the correct term, somewhat like Donald Trump. Over on the pound, well, we had on Thursday last week, we had a big break of 125, a bullish move through there. I personally got long on a retest of 125, only to see on Friday price to fall away dramatically. Prices overnight in the Asian session has been falling again on the pound. Predominantly, we believe, on the news that the Scottish Independence Party, who are the government of a restricted governing body in Scotland, appear to be suggesting that they'd be looking for another referendum vote on Scottish independence in 2018. So a significant political event, again affecting this market, all playing into our arguments to stay away from these markets, predominantly at this moment in time, until we get we really need some direction for the dollar, so that these markets can have a more fundamental bias and less political bias. Over on the Aussie now, this is a market we are short. This market from about 77.30. There's a nice level through here which we'll be looking for a break below this channel through here, which anchors through this level here rather nicely. A break through this level here, close below. I'll be looking for it to close below that low there, and then for a retest of that level to take it back to the short side for the further downside to this market. So that is a market that potentially could play out this week, irrespective of what goes on elsewhere. Another market we're interested in is the Canadian dollar. We had a trade in place, and it's remained in place this week about the 1.3 big round number level there. We've got a commitment of traders buy signal or bottom signal here in support of that. As you can see from my trend lines on this, I've got a falling wedge there, which we do appear to have broken and now retested in conjunction with that trend line through there. So this opportunity may not arise, but it is a very high probability level, because A, it's physically a level, and B, it's also obviously that big round significant number. One thing to remember in this market is that we have the Bank of Japan rate statement on Wednesday, so I would look to be out of this trade or close this trade prior to that event, which I think is 3 o'clock in the afternoon, or if I'm right. Don't take my word on that, look at your calendars, and look for that to play out that day before reinstating that order if appropriate, or acting otherwise dependent on what comes out of that meeting. Okay, one of the crosses that we're looking at is the EUROAUD. We are long this market from intraday entries further down here, looking for further intraday entries going through here, but from an end of day perspective, we're looking for the Aussie weakness to play out on our Aussie trade, to take price above this level through here, to come back and retest that and take it to the long side. That would be a more cautious trade. As I say, that would be supported by Aussie weakness, and if we don't see a recovery in the dollar, which leads to a strengthening on the euro, that's going to help play out in that trade. So we can't draw those conclusions from a fundamental basis. That's what could potentially help the trade out. The trade is purely a technical level, through with a channel and price action. So trading that purely technically rather than on a fundamental basis. Okay guys, so that's an overlook of the markets. A reminder that the next free trading event is in London on Wednesday the 15th of March. If you click on the logo that comes up shortly, that'll take you through to the website. You can use the contacts page there, or simply email us at info@phoenixblue.co.uk for an invite, joining details, etc., for that event. Also, that same I think it's the week before, we have a similar free event in Sweden. If you're in Sweden, you're interested in that, please again visit the website, get details from there. You can find out exactly where and when the event is. That is a full day event, I believe, absolutely free of charge, and you will be trading alongside the Phoenix Blue fund managers. Okay guys, that's it for today. Preaching caution yet again. I'm sure you understand why from what we've discussed there. Have a great day's trading, and we'll speak to you again in the morning. Goodbye.